Well, yeah, there were several catalysts to give us a market sell-off, any one of which the market could have handled if it was on its own. We had the Fed pulling back from repos, we had the coronavirus worries, and then we had Bernie Sanders suddenly winning, and the people had to face the prospect of a socialist Democratic candidate for president. When you get all three of those put together, that seemed to be what tipped the cow over and was more than the market could take. And the market bottomed on the 28th of February, the day before Sanders won the South Carolina primary, and then the market got another boost after Biden did, and the market got another boost after Biden won on Super Tuesday, or won most of the elections on Super Tuesday. Today's pullback doesn't fit quite with that model, but the market seems to be happier facing a Biden prospect than a Sanders prospect. But we still have the problem of worrying about coronavirus, and we still have the problem of the Fed being too tight both on interest rates and on repos. They need to get with the program, and they need to do another half-a-point rate cut. Now is a good time. Why wait for the meeting to do the right thing? You can do the right thing anytime.
Well, they've done 50 basis points before a meeting. I guess, Tom, to push back on which of those factors you're putting the most weight on, you could say the politics has improved a lot. And the Fed has certainly improved, albeit you want it to improve further. And the one outstanding issue is the coronavirus. So do you not think corona's having a big weight on the market at the moment?
It certainly is. It's probably having a heavier weight on everyone's emotions and on their psyche than the actual effect on the economy, which is not unusual. We saw that with the Ebola panic in 2014. Everybody was fearful that we were going to all die from hemorrhagic fever, and the market sold off. And then when it finally seemed like things were getting, the authorities were getting a handle on it, then the market rebounded and made it all back and more. So that's the nature of overreactions to emotional issues like sickness and death. We are humans. We still have the caveman brains that cause us to react with fear to anything like that and not to act rationally. I'm not saying there's no reason for worry about the economy, but I'm saying that investors have a proven ability to overreact, and they seem to have done so in this case. You don't get a chance to buy a 40 VIX very often, or a minus 400 McClellan oscillator reading. Those don't come along very often, and they usually end up being opportunities if you can take the dead cat bouncing and flopping that goes on for the few days afterwards.
So what are you saying? That we've seen the bottom for now?
We have seen the bottom for now. We have another 2 weeks to go up into the FOMC meeting, but then we're going to have some more weakness into this summer, probably bottoming around June. But for right now, there's a chance we can get a rally that rips your face off just because we've stretched the rubber band so far. And we've had up one day, down the next with huge breadth numbers, positive and negative. That's a great sign for a bottom, but it doesn't have to mean a bottom you go up for years from. But it does mean that we have to have a big recovery as people start to get over their fears. Then we can get into worrying about how the Fed didn't do the right thing at the next meeting, and what's that going to mean for the longer term as we get more data in. And that'll be what gives us the next down leg into June.